Well, and the other thing, Scotty, I mean, as it says here, I mean, this epidemic is not going to end anytime in the near future.
That's the sad part about it. You hear all the news. It's funny how big the news is when with what they want you to believe. They say, hey, home sales are up, rates are good, but that doesn't mean that we're climbing out of this gigantic hole that we're in, this mortgage crisis that we're in.
Yeah. And Scotty, do you see this strategy that we're showing our real estate friends here, real estate agent friends? Do you see this strategy as something that will definitely get them back to the title company more often?
Well, that's why we're here, Carlos, to help everybody that's on this call. Give them not only a little bit of attitude, a little bit of what do you want to say, juice in the.
How about money in their pocket?
Money in their pocket, because I guess right now everybody's kind of like going. We're hearing the doom and gloom. National foreclosure epidemic continues. Yeah. Mortgage giants tighten rules. We're getting continuously every single day. It's so hard to keep up with all the rule changes and the tightening and all this stuff. So this is almost a necessity. If you're not using this one tool that we're going to show you today, it could mean thousands of dollars of loss for you if you don't take grasp of what's going on here.
Right, and again, just to remind everybody that we're not selling anything here today. This is absolute content. We don't have anything to sell to you.
That's right.
We understand this. See, over here, we're Scotty and I are in the marketing department over here at the mortgage company, and we understand that we Scotty, would you say that the loan officers they need to loan money, and it's not
Correct.
until somebody buys a house can they loan the money. So our strategies are to help you sell more houses so that more people need to borrow money.
100%. And I guess the biggest factor with this program is this allows you to take all the homes that are in disarray and need of repair and give them sunshine at the light of the tunnel.
Yeah.
Because a lot of people walk. And it has so much. We're going to talk about this. It has so much to do with your attitude about the whole industry. When from the point of you answering the phone, and we're going to touch on that stuff. So, this, I love this picture right here that I found. Great recession, the Fed weather update, and then look, sunshine. I think the storm has passed.
Nice.
It's just a great thing of everything that's going on right now, of the thought process that I have. Hey, it's over. Oh, it just started. Oh, it's getting worse. It's so it's a huge black hole that we are all in together.
And I guess
to work through.
And I guess this, one thing I like about this one strategy that we're covering is that with all the foreclosures and short sales where, in the past the seller might go in there and repaint the house and mow the yard and, and get everything up to snuff.
Yeah.
When they're walking away with nothing or they're getting kicked out, that's what makes this work even better than ever.
Well, not only that, they're taking stuff with them. And that's the stove, the refrigerator, the plumbing, the sink fixtures, all this stuff they're taking with them. So the home needs all this stuff.
Yeah.
And I guess this picture, this screen I'm on right here, Carl, is, are you walking in with this attitude of, okay, this home isn't going to work. I know for myself it wouldn't work for me, but you don't know what the buyer's thinking when you walk into this home with them. And this is a huge part of what's going on, because 9 out of 10 homes are going to be in foreclosure in need of repair.
Yes.
And if you walk in and watch their eyes and see what they think, yeah, it might stink and it may look like terrible, but I'm just gonna say, if you change that and let them tell you what they want and let them tell you how they feel about that home, and if they see potential,
yes,
then this program is perfect for that.
Yeah.
You're gonna create a positive attitude with your buyers because you're letting them make the decisions instead of you make the decisions for them.
Yeah, and maybe I'm jumping a little bit ahead here, Scotty, but
Sure.
I think this can also be used as a good listing tool also, particularly to like an REO where
Totally.
if you're looking to list a bank-owned properties that
Right.
you can tell the banks, look, I have a solution to a problem where these houses that we're trying to sell. Let's face it, like you said, they're missing air conditioners and refrigerators and walls and maybe they even took out the kitchen. Literally the kitchen cabinets and whatnot.
That's right.
When you're the one that offers them a solution on how they can sell that house, you change all the rules.
Well, not only REOs. REOs is probably the best for REOs. But one other situation that I see this a lot is the short sales.
Yeah.
Usually, people that are in trouble with the short sale, one, they haven't been making their payment, they haven't been keeping up on the house, There might be water leaks. They moisture damage. There's leaks in the basement, piping, electrical, all this stuff that they haven't been able. They can't make their house payment, so why are they going to pay anything else?
Yeah, good point.
No heat, so now we got frozen pipes. I mean, there's just so many different reasons this program comes in handy when you're showing your clients either a short sale REO. For sale by owner. I mean, there's for sale by owners that that aren't making it, that have to sell. They think there's no way they can hire a real estate agent to help them sell their home, so they're trying to do it for them. A realtor can come in and help with this and say, hey, I got a program. Yeah, we can sell your house short, but not only that, we can include repairs for the borrower when they, if we find the right borrower for your home.
And so that's what we're kind of talking about here today, Scotty. What is you're getting ready to show us the program. Where
right.
you just you know this way better than I do, Scotty. Explain what we're going to see.
Well, I want to show you one more slide, and okay. I love this slide. If you, and actually, I made this line up myself. My daughter helped me with this last night. But bad news is only bad news if you listen to it. So if you're the person that's going to hang around the water cooler and listen about all the foreclosures, listen about how the properties they need repair and all this stuff, that's exactly your life that you're going to live, less the paychecks.
Yes.
All right, so I just wanted to show this because I love this picture. So the program that I'm going to go over with you today is the FHA 203K loan. Buy it, fix it, all-in-one loan. You can include repairs, and the best part about this loan, Carl, is the repairs do not have to be done until after close.
Interesting.
Huge point there. Huge point there.
I mean, guys, this is a deal saver if I've ever seen one. And again, as you're watching this presentation, I want you to get out pencil and paper and start writing some notes about how you can use this to get more listings, and make sure that they actually sell.
That's right.
And again, if you look just beneath where our screen here, you might have to scroll down just a hair bit. If you look down there, you'll see our phone number there, where you can call the office, and we have our contact information right under there. So feel free to call into the office, too. So, all right, what you got here, Scott?
Sounds good. So, here's the typical, this is a little extreme, and I want to go with extreme to, how do you turn this fire burnt home into this? A nice, peaceful-looking, very nice-looking home to where someone would want to live in it. And this is what you have to create for your borrowers. It's not so much, this is, again, far extreme of things, but how are you seeing a property when you walk up to it? What you see as an agent is not typically what a borrower sees, because you don't know where they're coming from. You don't know where they've lived their whole life. You don't know what they're used to.
Okay.
So they may see this fire burnt home as the one on the right, where after it's totally complete. But you have to give them the options available to make it that way.
Okay.
Make it their own. So there's two types of 203K loans. Okay. There's a streamlined version, which is probably, I would say, 85 to 95% of the time you're going to use a streamline. It's used for homes that need minor repairs, and when I say minor, anything that you can touch, feel like windows, and we're going to go over all the stuff that's eligible in this type of 203K. Standard 203K, this is when you talk about structural changes, you want to add to it, you want to finish the basement, you want to do all kinds of stuff that's involved in a 203K. Again, the streamline up to $35,000 in repair.
So again, just to make sure everybody understands, and again, Scotty, you certainly you talk to over at the loan department better than more often than I do, being stuck here in the marketing department. But on this loan, this is where somebody can buy the house now, go ahead and close, and after it closes, then put on the new roof or put it back in the air conditioner or put in the new flooring, or put in the new walls, or whatever. If somebody went and trashed a place before they move out, you can go ahead and close before all that stuff needs to be done, and that's what we're talking about here.
100%. And not only that, the best part about this is you can actually, when you do stuff like this, you negotiate on the actual home, not so much on repairs and stuff like that. So you can get a better deal on the home. And as we're going to go over later, you're going to see why that's so important and powerful for you as a borrower and you as an agent. Because, the big thing is, again, the repairs are done after close. So after you're out of the transaction, paid and walking home with the check, the 203K starts. And that's what's so powerful about this. So
as a real estate agent, they go home with their closing check. They go home with their earned commission the day of closing.
100%.
They don't have to wait until everything's fixed up.
No, there's nothing held back on this program. So the agent, the big thing for the agent is to get the borrowers into a home that they like, that is into a 203K. Once this deal closes at the title company or with the lawyer, you're said and done. Your paycheck is yours.
All right, walk me through the process here, Scotty.
All right, so the process: find a property, make an offer. A potential home buyer locates fixer-uppers, executes a sales contract after doing a feasibility analysis. Okay, some of this is a little bit boring stuff, but I want to go through it just so you kind of have an idea of the process. Okay, the contract should state that the buyer is seeking a 203K loan and that the contract is contingent on the loan approval. So let's find a property, make the offer.
Okay.
All right. Find an FHA-approved lender. The home buyer then selects an FHA-approved 203K lender and arranges for a detailed proposal showing the scope of work to be done, including detailed cost, estimate on each repair or improvement of the project. So what I recommend, or what you should recommend, is to, one, get estimates before you make an offer. Have a good idea of what kind of repairs you're going to expect.
Okay.
All right? And I would recommend doing that with your borrowers before you even get to that part. Before you even get to make an offer, because if you make an offer for $100,000 and you need $20,000 in repairs, you need to somewhat know that, and then your real estate agent can know if the home is going to appraise for for that amount, and so everything works out at the end.
And I guess the good news about finding an FHA approved lender is if you just scroll down that number right down there, just beneath our screen here, that's what we do here at the mortgage company. In fact, this is the 203K is one of the things that we specialize in. So we're very familiar with this program. And Scotty, would you agree that this is not like if let's say somebody already has their favorite lender, and I'm all for that, right?
Yep, totally.
This probably is not something they would want to take to somebody that's not used to doing these, because my guess is there's like 100 ways to kind of screw this up in there.
You want to make sure that you're working with somebody that knows what they're doing on an FHA 203K loan for sure. And believe it or not, there's not a million lenders out there that do these. Now, hopefully, if someone does it but they're not familiar with how to do them, they'll be upfront with you and honest. And I've had that happen before, where I've run into a lender that we do them, but I'm not real good at it.
Yeah.
Because they've done one or two. You want to make sure you know what you're doing. So one, you get the proper financing that you need. You don't come up $4,000 short at when it's all said and done. And we're going to go over the details of that a little bit later.
Okay. And then number 3 here, appraise the property.
So number 3, appraise the property. The appraisal is performed to determine the value of the property after renovation. Now the cool part about this is the appraiser, when you order a 203K appraisal, the appraiser will appraise it as is, and then after renovations are done. So for the appraiser to have what you're going to do to the property is very important, so they can put that into perspective when doing the appraisal.
Okay.
All right. Loan is approved and closed. The borrower, property, and requested improvements are approved, and the loan closes for an amount that will cover the purchase or refinance cost of the property, along with the improvement cost. Very important.
Okay.
The amount of the loan will also include contingency reserve of 10%, okay? What they do is they bank a 10% contingency just in case, when you get quotes on stuff, it's like, oh, we missed that part, or oh, we didn't allow for the extra $1,000 in this or that.
Yes.
So very, very important.
So if the estimate is, just throwing some numbers out here, say the estimate's $25,000, they would add another $2,500 on top of that.
That's correct.
Just to be on the safe side. Now, one thing I see missing here on 4A that we want to make sure everybody understands. 4A is you as the real estate agent go home with your check, right?
That's totally. Yeah, approved. Yeah, loan is approved and closed. So that's right. And I actually have that on the next screen. So I got a nice little picture for you there.
Okay.
And requirement for you as a closed loan for us as a lender. So all right. So it's going to be 10 to 20% of the total remodeling cost. The higher you get, of course, in repairs, because believe me, you can have a $350,000 home with a $150,000 repair bill. They might do a contingency factor of up to 20% just in case, because you're getting big numbers now.
Okay.
So they can do 10 to 20%.
So
right?
So that 10% contingency is not written in stone. If it's a huge renovation, they could ask for 20%.
They could ask for up to 20%. That's correct, and that's going to be dependent on the lender you're working with.
Okay.
All right. So total amount cost cover any extra. It's to cover any extra work not included in the original proposal. At closing, the seller of the property is paid off, and the remaining funds are put in escrow account to pay for the repairs and improvements during the rehabilitation period. All right?
Now, as me as the real estate agent, is there anything I need to do during the rehabilitation period, or pretty much I'm kind of done?
Actually, you do need to do something.
Okay.
Find another borrower.
That's right. List another home.
So unless it's like a $1 million deal and you got a really nice check, then you might want to take a month off or something. But I would suggest finding more borrowers to help out with this type of program. It's a really powerful program, and I think after going through the rest of this stuff, you'll see why it's so powerful.
Okay. Well, I can see it already because I mean, with all
exactly.
with all the foreclosures and short sales and people leaving the houses a little rough around the edges and frankly maybe a little upset and throw some holes in it just
totally
as anger. This is
and
absolutely
I mean
an
here's
answer.
the thing. We've been harping on, REOs and foreclosures and short sales and stuff, and I want to make this clear. It doesn't have to be any one of those. It can be any property that is in need of repair or you want to make your own. A lot of people want to buy a home and make it their own, so it doesn't have to be a foreclosure. It doesn't have to be a short sale. It can be a normal individual that owns the home. You just it needs a new roof, or you want to put in new appliances, or on this particular loan, there's no minimum amount that you have to spend on a 203K loan.
Okay. Cool.
So if you want, if you want to do it and you want a new furnace, or you want a new stove or refrigerator, or you want to put new carpeting throughout the whole house, you can do that.
Okay. All right. What we got next?
I know. And right now in our industry, we're focused on foreclosure, so it's really big. So, number 5, work begins on the property. The mortgage payments and remodeling begin after the loan closes. The borrower can decide to have up to 6 mortgage payments, PITI. And this is really, really cool, put into the cost of a rehabilitation if the property is not going to be occupied during construction.
Interesting.
But it cannot exceed the length of time it is estimated to complete the rehab. So, for example, if it's only going to take 3 months to do the rehab, you can't have 6 months worth of PITI.
So basically, you can set this up so the buyer, has no payment for up to 6 months.
It's correct, because the big thing is, one, they're doing such rehabilitation to the home that they physically can't live there. There's no water, there's no electric, there's no heat, so you physically can't live there. It's not a livable property.
Very interesting. Okay.
And make sure, and a lot of these guidelines are fairly standard, but make sure if you have a question, because this is a very generic HUD-approved 203K. Some lenders don't allow for this. Some lenders don't allow for that. So just make sure and ask the questions when doing your 203K loan before you get buried into it.
Okay.
Okay. So number 6.
Mm-hmm.
Number 6 is disbursements and payment. Escrowed funds are released to the contractor during construction through a series of draw requests for completed work. And typically on a Streamline 203K, there's only 2 draws. The first one, which is typically after, now, real important here, and this is, again, lender specific, so make sure you check with your lender who you're working with to do the 203K loans. But what typically happens is when the loan by the banker is closed, it's then sent to the 203K company. And then within usually a week to 3 weeks, it's then funded, okay? That's when the funds are available for draw. And at that time, usually the first draw is given for supplies and anything that needs to be given to get the process started.
Okay.
All right? To ensure completion of the job, 10% of each draw is held back. This money is paid after the lender determines there will be no liens on the property, which is real important. We don't want any liens from any builders or HVAC or anybody that might be doing work on the property. We want to make sure everybody's paid.
Okay.
That's what that 10% is for. All right?
Yep.
So, I'm going to hit the next slide. Eligible properties. This is really cool. 1 to 4 family completed for 1 year. So when I say completed for 1 year, is they don't want to take a home and do a 203K on a new construction home.
Okay.
All right, we can't finish the home. It's got to be completed.
Okay.
All right, can be used to convert to a 1, 2, 3, or 4 unit. And this is, again, very lender specific. Okay, some will, some won't. A HUD guideline allows you, and this is very, very powerful. If your lender will allow you, you can take a 1 unit, convert it to a 2, 3, or 4 unit. Vice versa, you can take a 2 unit, convert it to a 1 unit using this program.
Very nice. Okay.
But I want to be very specific. Check with your lender on this. Okay.
Okay.
And like I said below, multi-units can be converted to a single family, which might be really important. If you have a huge 2 4-bedroom, 2-unit, multi-unit, you can convert it to a single family 8-bedroom home, which is, convenient for a big family.
Okay.
All right. So Next one, special requirements for condominiums. I want to throw this in there because a lot of condominiums out there, and it's condominiums are a great deal. Must be owner occupied.
Okay.
Rehab is limited to the interior.
Okay.
Less than 5 units per condominium association, or 25% of total number of units, can be undergoing rehabilitation at the same time. So, more or less, the whole place can't be under construction.
Gotcha. Okay.
All right. The maximum amount of loan cannot exceed 100% of the after approved value. All right. So just little stuff there for condominiums. Not a big deal, but if you're doing it, you just know you can do it at a condominium.
Okay.
All right. Eligible improvements. Now this list is pretty big, so take your time here. Repairs in place. I mean, I'll let you kind of look over it.
Can we do this? Look, if you, I tell you what, just because of time, why don't we have it? Look, if you want a copy of this. Frankly, of this whole PowerPoint presentation.
Yeah, this whole PowerPoint. Yeah, we can give you a copy of it.
Yeah, just
for sure.
The number right down there. Give us a call, and we'll be happy to give this to you.
Awesome.
Okay.
So, 203, and now we're talking about a 203K Streamline. Very, very important that there's a difference there. There's no structural, things that are eligible for this Streamline. So.
And really, as a real estate agent, do I really care whether it's a Streamline or the regular? Does it really mean anything to me?
It actually does, because we're going to get into the full-blown 203K, and I call it full-blown because it does require other requirements that are a little more in-depth. So yeah, Streamline is what you're going to see, because mainly you're going to walk into a home and go, okay, I want new flooring, I need new appliances, I need new plumbing, electrical, furnace, all that stuff is included in a Streamline. Where a guy walks in and goes, okay, I want to add a bedroom here, or I want to add a kitchen over here, or I want to finish the basement. That's when it gets into a full-blown.
I got you. Okay. All right. But
I
look at just. Looking through that, it looks like almost everything. So I'm interested in that. Yeah, that's a great slide you showed. What is that again? Ineligible.
Ineligible improvements. Now, again, we'll give you a copy of this, but major rehabilitation, which I've talked about, such as relocating of load-bearing wall, new construction, including room additions, repair of structural damage, landscaping, not included, any repair or improvements requiring a work schedule longer than 6 months, which would be, construction, rehabilitation activities that require more than 2 payments per specialized contractor, repairs requiring detailed draws, plans, architectural exhibits, or require a plan reviewer. So, a lot of them, stuff that you would get into when you're doing a full-blown construction.
I got you.
All
right, makes sense. Now, in your experience, what are we seeing most over here at the in the mortgage department? What are we seeing mostly? Are we seeing mostly the Streamline or mostly the full-blown? I know we do both, but which?
Yeah, we do both. Yeah, so mostly we're seeing the Streamline because that's when I get into the requirements for the full-blown.
Okay.
You're going to see the other requirements and people go, okay, maybe I don't want to do that, or maybe I don't want to add the bedroom, or find a different home or stuff like that.
Okay.
So,
all right.
Not to say that it's like totally out of the question to do it. It's just there's more steps, there's more people involved. You have a consultant that you have to work with.
Well, and again, it looks like the Streamline, just by what I've seen here so far, it looks like the Streamline really does cover, for all practical purposes. I mean, granted, there's going to be the occasional rarity where somebody has a 4-unit, they want to convert to a 1-unit house.
Oh,
but
sure.
9 times out of 10, it's a house of foreclosure, short sale, and the house is in disrepair, and we just need to bring it back up to snuff. That's what we're.
Yeah, and that's 95%. I mean, obviously, if you're looking for a 3-bedroom and you buy a 2-bedroom, then you're.
You can do that, but
then
typically that's
not the thing you normally do. You normally buy what you need as a 3-bedroom and then just make it the way you want it as a 3-bedroom.
All right. What else you got?
All right, so contractor requirements, and again, this is lender-specific, but typically borrowers must use licensed, insured contractors to complete rehab, okay?
Common sense. Okay.
I recommend having approved contractors available for you, like for your borrowers. So as a lender, as a real estate agent, make sure the lender you're working with has approved contractors because you want to be able to get those quotes right away. You don't have to wait a month to get a quote because you might lose the home. If you're thinking, okay, I think it needs $15,000 or I think it only needs $5,000, but then you get the water and you turn the water on, you get broken pipes, you turn the furnace on, the furnace needs replaced. Now you just added $10,000 to a $5,000 what you thought was repair.
Yes.
You just kind of blew your offer.
Okay.
All right, so just important there, make sure that you have contractors on staff. A lot of your lenders you're going to work with will have those available. If not, I recommend working with someone that does.
Okay.
All right, timelines and disbursements. This is the one I love the best. When loan closes, you get paid, like Carl said. And here's the requirement. I have one other requirement.
You have to
bring
some
cookies to the lender.
Yeah, you need to bring cookies by our office.
The Cookie Monster.
Yeah, I like
just kidding,
that.
but I just had to throw a little humor in there. So, and then disbursements. disbursements. So on the disbursement side of things,
go ahead. I got you.
Okay. So no more than 2 payments may be made to each contractor. The first payment is intended to defray material cost and shall not be more than 50% of the estimated cost of all repairs and improvements. The lender will allow the first payment at closing to cover for and not exceed actual required. So when I say at closing, that's the little tickler. Some will disperse at closing. Some lenders have to wait until the loan's actually funded by their 203K lender.
Okay.
All right, so just know you want to be really upfront with your borrowers, because if they think they're going to get a check to start the construction at close and it's going to be 2 weeks, they're going to be very, very upset with you.
Okay.
So make sure you have the details on that when you can actually have that upfront money to get the cost started, okay?
And again, to get specifics of your particular situation or your borrower's particular situation, just call over here at the office and we'll talk to you, and we'll get some answers that'll be specific for your particular situation. So. All right, what's next?
All right, let's go to the next one. So features of the standard 203K. Okay, now I'm going to go into the full-blown 203K.
Okay.
And we'll kind of breeze through this because it's somewhat similar, but again, it has to be an FHA-approved consultant.
Okay.
All right. Standard 203K insures mortgages covering the purchase or refinancing or rehabilitation of a home that is at least a year old. And all standard 203K loans must use an FHA-approved consultant. That's another gentleman or gentleman that's going to actually walk through with you the home and tell you what needs to be done to make this loan saleable to HUD.
Okay.
All right. Eligible improvements, structural alterations, and reconstruction. You can pretty much do anything you want with this loan. Changes for improved functions and modernization. Repairs cannot exceed 50% of completed appraised value. Okay, let me give you a little example. So say I got a $100,000 home, and I do a $150,000 loan. Okay, that would be okay, and the house appraised for $300,000.
Okay.
All right, so we're good there.
Okay.
All right, eligible improvements. This kind of is really open to just about anything. I mean, obviously, if you're building a brand new home, you wouldn't want to use this program because you know.
Basically, it looks like on the eligible improvements, it's virtually everything, including in this case, like load-bearing walls and
in other words, I mean, you can even do major landscaping work.
So if something is like really out of date.
Yep.
Like we could add bathrooms, we could update bathrooms, we could tear walls down. We could add a bedroom. We could actually add square footage with this one. Is that correct?
Square footage, yeah. Remove. I mean, like you could take a 2-bedroom, turn it into a 1-bedroom.
Interesting.
Finish basements, plumbing. I mean, pretty much anything you can think of. Yeah, it's pretty awesome.
And you know what? Is surprising that I think will catch a lot of people by surprise here is that major landscape work in site improvement is allowed here.
It is allowed. Yeah, major landscape work in site improvement. Yeah.
Very interesting. Okay.
Yep. All right. So luxury items not eligible. All right. Swimming pools.
Oh, wait.
Barbecue pits.
Wait.
I know. I just blew this whole thing
all the fun stuff's not allowed.
Tennis courts. Gazebos. Yeah.
Right.
So there's just a brief of what's the luxury items.
So basically, this is not a pool loan.
It's not a pool loan.
Okay.
No. It'd be nice if it was, but because that's what everybody'd use it for. So.
Okay.
All right. Timelines, disbursements, same thing. When the loan closes, you're done. You get paid. Got to bring the lender cookies. Disbursements. The disbursements on this one, 10%. You get the 10% holdback.
Okay.
Used as an incentive. So, like I said, it's going to be used just in case your bids go over. Now, typically on a full-blown 203K loan, your possibility of going over, you're doing a lot more stuff. So the chances are going to be a lot greater than it would be a Streamline.
Okay.
Required for FHA 203K. Required on properties older than 30 years old.
Okay.
All right. A minimum of 10% of the closing costs. Minimum, but up to 20% could be escrowed there.
Okay.
All right. So let's see the next one. Oh, cookies again.
Well, you're into these cookies things.
Yeah, I know. I love the cookies, man. All right, so I'm going to talk a little bit about an FHA non-HUD. Okay, this is, and then I'm going to touch briefly on a HUD 203K because this is some really cool stuff. So borrower must have at least 3.5% into the deal. So $100,000 loan, they got to have at least $3,500 into the deal.
Okay.
Okay.
Now, when you're saying a HUD home, you're talking about one that's owned by HUD, like HUD is.
That's correct.
Okay.
Correct.
So now we're talking about FHA 203K that would be on my listing over at the corner that's either an REO or a private seller.
That's correct.
So this is for a non-HUD home. Okay, got it. Okay.
That's correct. Yep. All right, so seller can pay up to 6% of purchase price. And I put 4 now because HUD's going through some changes. So again, just check with your lender.
Yeah.
And frequently
it could be
on this type of program.
It could be 6%. It could be 3%.
3%, correct.
So
there's talks of going to 3. So just check and make sure before you write the offer, and you should always do that. But total loan amount, purchase price, and this is a cool part. And let me explain this a little bit. Purchase price plus repairs equals total loan amount up to 110%. And you go, okay, why 110%? Well, sometimes you're going to do repairs on the home that don't necessarily increase the value. For example, it has to have a furnace, has to have a roof, has to have siding, windows, carpet. It has to have all that stuff, but it might not necessarily increase the value to where you need it to be to do a 100% loan. All right?
Got it. Okay.
So you can go up to 110. So, for example, I'm buying a $100,000 home. I'm doing $20,000 in repairs. It appraises for 120. I'm okay because I can go to 110% of appraised value.
Okay.
All right.
Very interesting. Okay.
Very important there. So, like the next line, loan amount can go up to 100% of appraised value. Very, very important. So that's where this loan is so cool because, like, the borrower might want to do stuff that, I want new windows. Okay, you got to have windows. You got to have all the normal stuff that's in a home. If you're going to do the nice granite countertops or put in nice tile floor or wood floor, that stuff, okay, it has to be there, but it might cost more to actually do it, but it's not going to increase the value, in perspective.
So it almost seems like that with this program, the buyer is almost encouraged to do things nice.
Well, the nice thing about this is, and I talk with, you should talk with, you as a real estate agent, when you're working with a lender, you go, okay, when most people will buy a car first before they buy a home because that's the easier purchase to make. Yeah. The home is the largest purchase most people ever make. When you're talking about $10,000, and this is the cool part, it's only about $60 on your payment. So when you're talking to your client, you go, okay, well, you could do it now, put it into the loan. It's going to cost you $10,000 for that new furnace and new floor and new, carpeting. But if you go finance it and you finance $10,000, you got a $200 payment. Not only that, you're paying a lot more interest than you would be on your home, and you got an extra $200 in payment instead of just $60.
Interesting. Yes.
So then I educate them, okay, well, if you make that one extra payment every month, every year, so you can show them the savings and how they can pay their loan off faster and all that stuff. So you can go into detailed stuff like that.
Okay.
So, you as an agent, you can be talking to them about this stuff because if you know that, okay, and you can figure this out on a mortgage calculator, okay, if I have a $100,000 loan, my payment's going to be this. If I have a $110,000 loan, my payment's going to be this. And just show them, hey, it's better to do it now than to go take out all these other loans because you're going to be excited. You're buying a new home.
Yes.
You're in the buy-in mode. You're going to probably want new furniture. You're going to probably, all this other stuff. Use your money for that stuff instead of the stuff that needs to be in the home to make it yours. All right?
Okay.
Repairs must be done by a licensed approved builder. We talked about that. And, again, we have approved builders with us, so make sure that if you're working with another lender besides us, again, our number's right at the bottom there, if you're working with another lender besides us, just make sure that they do have approved contractors, builders, because that does speed up the the process.
Okay.
And it makes it go much smoother because those approved FHA 203K builders know the process, they know the bids they got to submit, and it just makes it so much smoother for everybody, the real estate agent, more importantly, the consumer that's buying the home.
All right. What's next?
All right. So I want to talk a little bit about the HUD foreclosure, and this is, they keep extending this, but it's a very important one. And what you would do is you would actually only have to put $100 down, okay? So let me just go back here. So on the HUD Streamline 203K.
And what is the HUD Streamline again?
HUD Streamline 203K. HUD is a HUD foreclosure. So okay. I think it's McBrio.
Uh-huh.
Does McBrio have all the HUD properties, I believe? So if it's a HUD foreclosure, instead of this 3.5% right here,
yes,
you only need $100 down into the deal, and all the other stuff is the same.
Wow.
Very impressive program. So, I mean, think about this. I can buy a home, $100 down, include all the repairs that I want to make it my own. Not only that, make it livable, whatever I want to do, windows repair, all this stuff. and only have $100 down on an FHA HUD-approved program.
That's amazing.
It is amazing. And not only that, Carl, they give you, typically on the HUD foreclosures right now, they give you, I think, in this may, check your area, $2,500 for closing fees, another so much for, so they cover a lot of the other stuff also.
Right.
So it's, very, very, very impressive program.
Well, as your last slide here that you're getting ready to show us here, Scotty,
yep.
I mean, it looks like, once we start working our business smart,
right,
that we can have more closings and spend more time doing
with the
thing.
Family. Yeah, and that's why I put this up here. I guess we as as the marketing team for you guys, we look at trying to work smarter, not harder, making sure our clients are aware of all the programs available to best fit their needs. And right now, the need of the consumer is to have a home that's livable and within their liking, that they can not have to sink a bunch of money into after the fact, which gets people into trouble. God, I had to put a new furnace in, right? Oh, my roof's leaking now. I got, and that's people lose houses because of that stuff, and they don't have to with this program. They can get all that replaced.
So not only is this something that the real estate agents can use to attract buyers, again, this is a monster of a program to bring to the table when you're looking to get listings from foreclosures, REOs that you have a solution to their problem. Mm-hmm. This is a great thing to bring to the table.
I mean, you can actually, if you have a seller that's looking to sell their home with a home that's in need of repair, you can tell them this is the program that we're going to market your home with. You're gonna tell them that this is available and this is that type of thing, and it's priced accordingly. You can use that heavily for a listing appointment.
Yeah. And we want to emphasize that on a real estate standpoint, I mean, honestly, particularly on the Streamline, I mean, really, there's not a lot of extra work to do. So it's not like, gee, one deal's going to bog me down, because we can show you how. I mean, the word Streamline can also go for how well these loans go. That these do act, these really do close, and you really do get to the closing table, and you really did solve people's problems. So the seller is happy and the buyer is happy, and when you have happy people, you have walking billboards, and everybody else wouldn't give them the time of day, and you're the one that brought the solution. You become the go-to person, and Scotty, being the go-to people here in the mortgage industry, I mean, that's proven to be our success, and it's why all these companies go out of business, and we're still here.
Yeah, and that's, I mean, you hit the important part. The important part, Carl, is that you get to spend more quality time with your family, not having to worry about, how the bills are going to get paid, because you have a program that's going to get you through these tough times. Yeah. I mean, everybody in this industry is having a tough time, but these programs are there for a reason. They're there for the consumer to get us out of this. I mean, these homes are in foreclosure, but somebody will love that home. That's just how it goes. Yeah. And not only that, if all you did, every single person like and trust, coworkers, and everybody you come across, if you talked about this program, it will truly drastically change your business, because you are looked at as the go-to person with a program that solves people's problems, and that's huge.
And now,
so huge,
more than ever.
Now more than ever in history, I think. Honestly, I mean, I don't know if we've ever seen the crisis in the mortgage industry we're seeing right now with all these foreclosures and short sales and values and evaluations. I mean, it doesn't have to be like this, because this program allows for it.
Well, and the other thing, Scotty, that we're real big about is, look, you as the real estate agent, we understand that the United States is going through a storm right now.
Right now, yeah.
But see, now you're selling an umbrella.
Yeah.
And can you understand that the power of selling umbrellas in the middle of a storm? I mean, that's really what it's all about. So exactly right there. So, Scotty, what do we want them to do right now? Just simply call the office so we can give them a copy of some of these slides?
Yeah, we actually, if you call our office, that number right below there, if you do want it, a copy of the PowerPoint, we'll get it out to you. It's a great refresher to go through the slides, and we'll even get you the stuff that I mentioned as far as the details of each slide and the details of the program.
Yeah, because it'd be kind of nice that you could put those a couple of those slides in your listing presentation.
Totally.
That you have there with you, and frankly, if you're in a house that doesn't need it, you just flip past those pages. But you tell them, oh, by the way, if you have a friend that's looking to sell a house that needs major issues, we can help them with that too. And now these people, I mean, honestly, by raise of hands, who can't say they don't know somebody that has a house in disrepair that's for sale? I mean, honestly, it's in fact, just being a little
You're pretty impressive, yeah.
I got one next door to my house.
They're all over.
So it's same thing.
There's always something. There's always something you can use this program for. So.
All right. Well, there's a phone number just beneath here, Scotty. I appreciate all the homework you did on putting this together. I know we really appreciate having you part of the marketing team and.
Well, I mean, I appreciate everybody showing up today, and it's it's a pleasure being able to provide you with some marketing strategies, some programs that are available that will truly drastically increase your business in today's market, and truly in any market. This program has been used forever. It kind of got slid underneath the rug when it was so easy to get a home. People didn't care about the repairs. Now it's really, really important because we need to have those repairs done because of the programs that are at hand. So it really means a lot to me to see people grasp a hold of this and get people into not only the home of their dreams, but fix it up the way they want it, so they don't have to waste money later.
Sounds good. All right, guys, we'll see y'all later. Call in the office. Call right now. We'll get a copy of the PowerPoint. Make sure that you're the one here in our area, because we've got several agents here on the call. Make sure you're the one that implements this, while everybody else is sitting on the couch eating potato chips and hanging around the water cooler.
Sitting by the water cooler.
While everybody else is there, we're going to get you back to the title company. Take action, call in. Scotty, I appreciate it, and we'll see the rest of you. We'll talk to you when you call in.
Take care.